regulators here in Oman in taking that approach to make sure they get it right, or as right as possible the first time.
Thank you very much, Abid. Safdar, you've actually, your firm and yourself, you've been one of the thought leaders in producing the Milliman report on Takaful on GCC this year. Can you perhaps elaborate more on GCC and maybe also make some comments in regards to your experiences in Malaysia and Indonesia within the 5 minutes?
Sure. Bismillah ar-Rahman ar-Rahim. Thanks for that. Just to sort of go back in terms of the discussions we have had so far and then synchronizing with the question that Suhail has just raised, in terms of the challenges that Takaful is facing, I think the fact that Takaful is being revisited as a definition in itself, as a model, is something that is really taking place at the moment. Now, when we heard the scholars say that Takaful effectively is a mutual, on the other hand, there is the issue of the policyholders. So in effect, just to summarize, Takaful has the challenges at both ends because Takaful is actually a hybrid where shareholders are doing business on the basis on وَحَلَّ الْبَيْءَ وَحَرَّمَ الرِّبَا. So you're allowed to do business. So Takaful is a business for the shareholder. But at the same time, the policyholders' expectations need to be met because there is a concept of mutuality, there's a concept of tabarru', there's a concept of unconditional donation. So in effect, the challenge of Takaful is that being a hybrid between a proprietary and a mutual, you have the challenges at both ends. So you need to make sure your shareholders are happy and you get your appropriate shareholder returns, and at the same time, to make sure that your policyholders are also getting value for money. And this is where the challenge comes as far as regulatory framework is concerned. Now, coming to the realities of the market, we have to be cognizant that there are certain natural aspects we cannot get away with. Islamic finance is a way ahead of Takaful. Islamic banking in particular is a way ahead. Takaful is lagging behind seriously. Just looking at the numbers, we heard of the total Islamic finance industry at 1.23 trillion, whereas we just heard the numbers on the Takaful side, 10 to 15 billion. You're not even talking of 1% of the total Islamic finances being Takaful. But having said that, if you look at the growth, because it's starting from a scratch, looking at the growth, you're talking of 30, 40, 50% growth in a number of areas. Now, from what Shakil has said, there is a clear distinction between the growth of Takaful in the Middle East versus the growth of Takaful in Southeast Asia. Shakil mentioned that Middle East is on level 1. I would say Malaysia is on level 6. There is a serious distinction between what has happened in Malaysia, and I think there are fundamental lessons for us to be learned as far as Takaful's success is concerned in the Middle East from the successful model in Malaysia. If you look at the value proposition of Takaful, I mean, who are the key players that would drive Takaful? Clearly the regulator, the operator, the shareholder, the consumer who wants appropriate products, the distributors, could be the banks, could be direct distribution, and the Sharia. Now, these have to go hand in hand for the success. And this is where Malaysia, the success in Malaysia has been because of the robust combination of these 5 entities within the value chain, which is really lagging in the GCC. So again, let us look at Malaysia, for example. In Malaysia, Takaful started in 1984 with the Takaful Act. So they had a vision. There was a long-term plan of within 20 to 30 years, in the 2020 vision of Malaysia, where was Malaysia to stand as far as Islamic finance is concerned, and the growth of the Takaful industry was parallel to the growth of the Islamic finance industry. The growth in the banking sector has got to mirror the growth in the insurance industry, and the regulators are very cognizant of that. So it started with the Takaful Act. One company came into existence, Takaful, Sharika Takaful Malaysia. The same parallel we see in the Islamic banking, where you had only one bank that was given a 10-year domain as a monopoly. This is where the regulator wanted to ensure that sort of one company is allowed to set the foot and allow the fundamentals to be strengthened. Thereafter, in the 90s, once that had that sort of mandate had proceeded, multinationals were invited. Over the past few years, we have seen a growth of virtually most of the multinationals in Malaysia today. But one fundamental difference is, compared to GCC, is that Takaful in Malaysia is family Takaful oriented, which means it is life insurance. In Takaful, there's a terminology of family Takaful being inclined towards life insurance, whereas you have general insurance, which sort of refers to general takaful. Malaysia decided to take the approach of family takaful primarily because that was the avenue where penetration was virtually zero. Now, that same distinction comes as far as Middle East is concerned, that our insurance penetration is virtually 0%. We talk of life insurance penetration, it's literally you're starting from scratch. I genuinely believe, looking at the success of Malaysia, of Indonesia, which in our study we have projected, by 2015, the growth in Indonesia will be close to what we see in Malaysia as far as the sort of absolute numbers are concerned, and most of the growth is coming from family takaful. Oman is in an ideal position. You look at the experience of Malaysia, the experience of GCC has been very rough. The reason it has been rough is because general insurance has been the focus. The fundamental question comes up whether takaful can be synchronized with general insurance. It's a question of mutuality, sharing of surplus. Can that practically happen in a market where people are undercutting each other on motor business? I mean, I hear here significant issues as far as motor business is concerned, health. And it's the same story across the GCC. Where you find fundamentals of growth, where there is a need, where penetration is low, is family takaful. Now, coming to regulation, Bank Negara Malaysia set up an infrastructure of regulation that started from the Takaful Act, with a Takaful operating framework at the moment that looks at operational efficiency, the health of the asset side, and Datuk is here, fortunately, so we talk about the asset side, making sure the policyholders' reasonable expectations are met, and at the same time, the uniformity of the model. We have an issue with the uniformity of the model, the issue of Qardul Hasan. Can qard be considered as something as embedded within the capital base of the company? Can qard be written off? If you're talking of life insurance, you have products over 25 years. And the regulators have not really addressed these issues in GCC, whereas in Malaysia, they have provided a very robust framework to the criticism of some of the Sharia scholars, but they had to start somewhere. And I really feel Oman is starting from scratch. If the regulation can be strengthened, if Oman can focus more on family takaful, where the penetration, the real need of insurance is there. We heard about the sort of the affinity group orientation, the Jamia concept that you have. It's a beautiful dimension to increase penetration in this part of the world. I hope I have said more than my share. Thank you.
Thank you very much, Safdar. That's been a very fantastic synopsis of what is happening both in the GCC and the comparison with the leading benchmark, which is Malaysia. I will now ask Mr. Ajmal Bhatti to give his perspectives, not only on the GCC, because I know Ajmal, as the president and CEO of Tokyo Marine, is also involved in the MENA region, where the biggest market is Egypt. And so maybe you could also comment on the development with the Arab Spring in North Africa and, more importantly, in Egypt. So over to Ajmal.
Thank you. Bismillah ar-Rahman ar-Rahim. Going last means that all of the things that I wanted to say have been said.
We also have one more.
That's a good story.
Okay. I think what I would like to say is that GCC, how it is developing, it is actually not too far behind the developments that ought to take place. Although the regulatory framework needs to be something that one should be sort of really sort of focusing on. In particular, we are talking about things that are being introduced in the UAE, how things are in Saudi Arabia in terms of uniformity of what we want to achieve as an Islamic insurance industry. There are vast differences in how these things are approached. Mutuality is this fundamental principle of takaful. Takaful company is not a mutual company at all. It is a mutuality that is very important, and the cooperative principles actually should be applied both to the participants at the participants level and also to the shareholders level, because shareholders are actually partners in this whole thing. And they're not coming here for charity, they're coming here to do business. And therefore, there should be some return to this. And I think the hybrid model that perhaps Bahrain has is probably a better model where you have a wakala fee coming up at the top, which will pay for your expenses and so on. But because the shareholder is also sort of really participating in the risk of the business itself, they should be participating in the surplus, which is linked to the business risk. So that would be a right kind of model in my mind, and I've actually supported this model right from the beginning. And Oman has really a wonderful head start to all these issues. There are so many issues on the Takaful side as well. As Safdar mentioned, there is something called qard, which is actually the deficit that comes into the participants' fund. In insurance, you have to pay claims. If you can't pay claims, you shouldn't be in this business at all. And the claims in insurance cannot be really quantified in the beginning. They just happen. They happen because of the accidents going on, natural catastrophes, and so on. So these things create a deficit. Maybe claims have to be paid more than what the premiums have come in. So you have to build the position over the years in adding the reserves to these things to take care of it. But what happens is that sometimes there is, the claims are much more than what you have allowed for, and therefore the shareholders' capital comes into the rescue of the deficits that are actually in the participants' fund. And therefore, the shareholders providing this interest-free qard are actually then looking to sort of support this whole cooperative principle, the cooperative system itself. So there has to be some sort of return on equity for the shareholders as well, like a business proposition. But having said that, I think it has to be within the fair principles of the Sharia, which is very important. So there has to be a very balance, very much of a balance in this thing. Coming from the international perspective, I think what I've seen in my lifetime, and that goes back in the Takaful industry for the last 15, 20 years, is that there are two aspects to Takaful. One is that why should we have a Takaful when there's insurance? Because there are certain reasons why we want to have Takaful. There are certain principles that we want to adhere to. That's the first part. The other part is that we deliver what it's supposed to be, that the claims have to be paid, and therefore that's the technical part of the business itself. What has happened so far in the industry is that we remember the technical part, yes, we have to pay claims and all that, but we forget the top part. Why do we exist? Why should there be a Takaful? And that's very important. I think this is where we are actually trying to sort of, the first two sessions that we had were fascinating, and the debate about the Sharia compliance and all that. This is where we need to have that understanding. The customer, in the jurisdictions that we've been sort of selling insurance, Takaful, they don't really, they get confused as to what Takaful is all about. They see it as insurance. So this awareness, this promotion of the values, the ethics of the Sharia principles behind this proposition is very important. That needs to really be propagated. Coming to Sohail's question about Arab Spring and all that, I think that's a question that doesn't have an answer right now, but I think the way things are progressing, I think it will be all for the better for the society, for the economies and all that. And I think for example, just an example, in Egypt, Islamic banking is actually growing in terms of how people are perceiving it and all that. We are operational there in Takaful side. We see people actually sort of coming to us asking for Takaful. We see people wanting to work in our company because they don't want to sort of work in a conventional company. So these are actually very positive indications as to how things will be hopefully settling down in years to come. I just want to sort of have another perspective on the window, which was also talked about earlier. Windows are fine because windows are actually letting some of these companies go through a learning curve, but it is actually a half-baked solution. And one of my experiences of introducing a product in a conventional organization is that this product was a very good product. It was actually started selling very nicely through a call center, but there was no sponsorship behind that. There was no one there to sort of continue this. The call center had been trained, people have been trained, but people then join and leave, the staff leaves. And there was no continuation of the training behind what is takaful. And the call center people then started explaining it as just insurance, and the business just died down. So these are very, very important aspects that Oman can actually learn from what has happened in the industry, and you really have a great head start. And I think the regulator has a big part to play in making sure that takaful actually is a mutual system, and takaful company is a combination of shareholders and participants, and both, the interests of both must be looked at.
Thank you very much, Ajmal. Now, most of you realize that we don't have, Mr. Stuart Crocker from the head of private banking and wealth management from Abu Dhabi Islamic Bank here present with us today because he could not make it. However, I have had the luck to invite Datuk Nuripa Kamso, who is the CEO of CIMB Principal Islamic Asset Management, to talk a little bit about family takaful investment-linked investments in Malaysia, which was referred to by Safdar Jaffer, and what is happening in Malaysia. And needless to say, CIMB is also very active in takaful in Malaysia. So over to Datuk.
Thank you very much. I feel very strange that I'm the only lady who speaks in this whole conference in Oman.
That's why we invited you.
Thank you. And I actually feel more strange when I came out before the break session, and I saw there are magazines on the table, which a cover girl, which is of my face. So my strangeness converted into embarrassment. So I hope in a male-dominant situation like this, you will tolerate with me. You see, in Malaysia, the leadership in Islamic finance is actually dominated by the ladies. That's true. The leader in Islamic finance is the governor of the central bank, Tan Sri Zati. She's a lady. She is supported by the chairman of Securities Commission, Tan Sri Zarina, who's a lady. And if you look at the leg of Kuwait Finance House, the CEO is a lady. Hong Leong, the CEO, is a lady. There is so many lady CEO in Islamic finance in Malaysia. And I is actually the Chief Executive Officer of CIMB Principal Islamic Asset Management. It's an end-to-end Islamic, global, institutional asset management house. But it's headquartered in Malaysia. It could have been headquartered in London or New York. But the real reason why it's headquartered in Malaysia is because of its very friendly legal and regulatory framework, as well as the tax benefit that comes along with asset management companies and also takaful companies that is not taxed on their revenue until 2016. That itself encourages international business to open up house in Malaysia. I have heard from all my colleagues on the right-hand side, the takaful business. Safdar has actually covered the Malaysian background, operation, and all those. But I thought I should just touch in the next 3 minutes how an Islamic asset management outfit can contribute to the success of any takaful companies. Currently, CIMB Principal Islamic, for example, manages 5 institutional takaful houses. The value proposition we grant to takaful companies is from the standpoint on how these takaful companies can bring in higher return on equity or return on investment from the contribution pool that is collected from the contributors. Clearly, when takaful companies collect contribution from the contributors, if you use a simple modus operandi, you would just lift it in the bank in fixed deposit. But I would actually encourage takaful companies to appoint a third-party asset managers. Simply put, if you actually have a toothache, you go to a dentist. And if your car breaks down, you actually go to a workshop. But takaful operators, you are expert in managing, family takaful, life takaful, general takaful. You are not a real expert in managing the money that you collect from your contributors. So the value add I'm suggesting here is for you to actually outsource to asset managers like us. While takaful companies has very fragmented and small contribution pools from the contributors, you might find it a challenge to invest a big chunk into, say, a sukuk portfolio or a global equity portfolio. What we could do is to take even small amount, $500,000, $1 million, $5 million, and potentially companies like Semi-Principal Islamic Asset Management is having a UCITS compliant fund in Dublin, Ireland. So we would be able to actually assist you in investing your fund in investing your contributors pool in a fund which is going through a very robust risk framework. And you need not have to worry, because in a robust risk framework covered by the European standard and the UCITS compliance, you will still get your liquidity. You can track your track record from Reuters, from Bloomberg, from Morningstar. And if you actually need liquidity instantaneously, it is redeemable immediately, anytime. So the value add an asset management outfit can actually assist in a takaful operation is to make sure you all get the highest return on both your shareholders' fund as well as your contributors pool. From my experience in managing takaful operators' pool of funds, if I compare Malaysia and the GCC, most of the Malaysian takaful companies invest their contributors pool in a very safe and stable, non-volatile asset class. And that would be either in fixed deposit or a sukuk portfolio. Very little in an equity, because equity is more volatile and it actually is, yes, high risk, but gives you high return. But I noticed our colleague in GCC invests a lot more in an equity asset class, and that would be explained by the nature of the business itself. In Malaysia, the volume, like Safdev mentioned, is level 6. So the volume is already huge. So there is no pressure from takaful operators to invest in high return, the like of equity asset class. So they're quite happy investing in a sukuk or fixed deposit, and when there is actually demand or claim, it is easily redeemable. It's also a regulatory requirement in Malaysia to be investing in less stable, less risky, and more liquid. But clearly, in the Middle East, especially in the Saudi, for example, the capital required is so high. It's about 100 million.
100 million.
Yeah, 100 million Saudi compared to Malaysia, 100 million Saudi. Yeah, Saudi Riyal, yeah, that's about 30 million US dollars. Whereas in Malaysia, the capital is so much lower. The capital is about 10 million ringgit. That's about 3.3 million Saudi US dollars. As such, I think most operators in Saudi will have to bring in very high return over the equity of the shareholders, and they're actually pressured as a businessman, as an entrepreneur, as an operator, to bring in very high return, and that is why they are actually investing it in equity. So in Saudi, it's because the business volume itself is not as high and as low. So I basically need to share with you how an asset manager can contribute and have that value proposition on assisting takaful operators making extra return. Thank you.
Thank you very much, Datuk Nuripa, for that enlightening overview on Malaysia. I'm cognizant of time. Brother Khalid is on my right. Are there any burning questions from your good selves? Well, we have two. So where are the mics now? Better jog to the gentleman here first. Mr.
Thank you. My name is Oliver Aga, and I work with AIG in developing their takaful program for worldwide application. I've also researched deeply the question of the structure of Sharia in relation to how you structure these constructs. I think we have to be very careful, and quite frankly, you need to examine very carefully the notion of tabarru in takaful. So if you take the construct that party A makes a donation of premium, the insurer then makes a donation back upon the event of loss. Legally speaking, that's a completely unenforceable contract. Because the principle in Sharia is once you give a gift, you can never expect anything back. And it is generally understood, and in fact I've had deep conversations with AOFI scholars on this, and many of them agree. In fact, I had co-authored a note which was published in UCLA Journal of Islamic Studies that talked about how the sort of uncertainty in an Islamic insurance doesn't really relate to the insurance. Now, I don't want to make this a long debate. My question is specifically, and really a kind of a warning that in Oman, the regulators need to be very careful before taking on the notion of tabarru, because there are many other more appropriate and legally enforceable constructs that affect what essentially effectuates the contract. But the donation concept is very concerning.
Okay, I think before we take any answers, can we have the other second question only? We only have one more question, and then we'll try to see how we field these. There's the person there.
Good afternoon. This is Qurrat Alain from National Bank of Abu Dhabi. My question doesn't relate to takaful, but it's a generic question. I'm going to go ahead and take this opportunity where we have a lot of learned panelists under one roof here. The question is that the current scenario is greenfield in terms of economic industry. Say tomorrow the market players start setting up and we start operating an Islamic banking industry or a finance company, etc. As the economy, as Omani economy, what should we be ready for in terms of market changes, liquidity, etc.? And this question is applicable, like, not only to the panelists on the podium, but everybody else who is a panelist in Oman.
Okay, thank you very much.
Thanks.
I think I'll ask Dr. Ashraf in 1 minute to respond to our question, and then Mr. Abid Shakil just very quickly on generally market entry.
Thank you. I think this question is a burning question, and it is currently being debated at various forums. Recently, last week, there was a forum in Riyadh discussing about what would be the alternative model to tabarruk concepts, especially with regards to the issue of surplus distribution, taking back the amount of gift that one has donated. Because there is a clear hadith on this, whereby the Prophet ﷺ mentioned, Al-a'id fi hibatihi kal-a'id fi qay'ihi. A person who withdraws his gift as if he withdraws, as if a vomiting person withdraws his vomit. So these are the things that currently being debated, and generally that's why in Qatar they came up with this model. Basically, Sheikh Al-Quradari came up with the model of Syarikat Ta'awuniyah to replace the issue of tabarruk. And there is also a research. We are currently at ISRA doing a research of model based on wadi'ah, and it has been presented in Majma' Fiqh Al-Dawli wa Majma' Fiqh Al-Rabita Alam Al-Islami, and generally it has been accepted, but we have to further streamline on the viability of this model in terms of the operational issues. So that is the general comment that I can make, because it's still hotly debated in the market. Wallahu a'lam.
I will leave Dr. Ashraf to elaborate on that over lunch. Now, Abid, very quickly for the response to the lady from NBAD.
Just very quickly then, there is an expectation of an increase in the money supply between 15–20% in Oman that will have a real boost to the economy. This is money that isn't currently in the system. That money will come into banking. Banking will need takaful products for the commercial side, and they'll need bank assurance products for the retail side as well. So there's a direct correlation there. The role of the regulator is really to make sure there is solvency capital for any new entrant to the market, and the solvency capital is there to make sure that the business runs efficiently, effectively, and safeguards the interests of the policyholders, contributors, as they are for takaful. But at the same time, if that requirement of solvency capital is set too high, you won't have enough entrants